and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the trade setup, the stocks in news, and of course, we'll be getting you some trading strategies for the day as well. And if you have any stock-related queries, do send them in to us on our live feed, and we'll have them addressed by our expert on the show. But before getting our experts on the show and starting the discussion, let's take a look at the top headlines at this hour. The S&P 500 notches its third straight day of gains and the Dow closes over 0.5% higher as investors look beyond the crisis in regional banks. However, the tech-heavy Nasdaq underperforms. Asian markets, meanwhile, open higher as global equities rally. The SGX Nifty 2 indicates a higher start for the Indian market. Crude surges over 4% with the Brent hitting $78 a barrel as fears over the banking crisis ease. A stoppage in exports from Iran's Kurdistan region also drives prices higher. Also on the show today, how will the withdrawal of long-term tax benefit from debt schemes impact banks and banks and AMC stocks? Also stocks in focus today are Kalyan Jewellers, Vedanta and Lemon Tree. Well, let's get on board our technical expert for today then, Sacchitanand Uttekar of Tradebulls Securities joining us this morning. Good morning, Sacchitanand. Good to have you on the show. You know, the markets have been stuck in a range. Nothing has changed since last week, stuck around that 16,900 to 17,000 band. This being the expiry week, do you expect the Nifty to reclaim that 17,000 mark decisively?
Good morning, Nandita. Nandita, I think we may have a verdict today. In fact, if you look at the data since March 15th, where we saw Nifty slipping towards that 16,900 mark for the first time. This was the fourth time yesterday when we saw this particular level again getting revisited, but Nifty failed to give us a closing below the same. So probably if you look at the daily chart formation, we have a spinning top kind of formation, or doji, which indicates indecisiveness. And if you look at the way averages are placed, still Nifty is trending below its 5-day exponential moving average. So overall, I think today's trading range is well defined unless we don't see a breakout outside this particular range of 16,900 on the lower side and 17,100 on the higher side. We may not see any fresh trading momentum. As of now, the broader structure still remains weak, and that's why we believe that it is a good idea to create a short position in case we get a bounce back towards 17,050, 17,100 mark. Overall, the stop loss remains the same. Last week also we discussed this particular setup. 17,240 on the higher side remains as a resistance, wherein one should keep their stop losses intact. And on the lower side, we still believe that there is scope for a move towards 16,770. We are expecting this particular level of 16,900 to be eventually violated, and probably today might be a day wherein this particular level could be breached decisively. So yes, we are continuing a sell on rise strategy. Any bounce backs towards 17,050, 17,100 mark could be utilized to create fresh short positions.
Right, sell on rise is the strategy. Hold that thought, Sacchitanand. We'll come back to you, but let's also go across to my colleague Neha from Moneycontrol Pro to discuss the impact of removal of long-term capital gains benefits and indexation benefit from debt fund. Good morning, Neha. Good to have you on the show. Well, it was a bolt out of the blue on Friday, and a lot of these benefits have been removed from debt funds, and that has taken the sheen off debt funds. But how does this impact AMC stocks going forward?
Yeah, hi Nandita, thanks for having me on the show. Yeah, it was a big jolt for the mutual fund industry. So if we have to talk about the impact of the same on the AMC industry, let us first understand how AMC industry has grown. It has grown by leaps and bounds in the recent years. We have seen the asset under management of the mutual fund industry touching 40 lakh crore as of Feb end. But most of this growth has been driven by equity funds, and this is reflected in the rising share of equity in the total AUM. As of Feb end, equity assets constituted around 51% of the mutual fund industry's total AUM, and this was 23% in FY13. So we can clearly see that the equity funds drove the growth. That said, the debt fund still constitutes 20% of the AUM, and there will be some outflows because of the tax changes. And this outflows would actually go to the bank FDs. It would impact the profitability of mutual fund or AMC stocks. But if we look at how much the mutual fund earns on debt funds, it is relatively very low yield as compared to equity assets. So the impact on the profitability of the asset management companies would be very less. That said, AMC stocks are still something which investors should be very cautious about. And we have been highlighting this, that investors should remain on sidelines as far as the AMC stocks are concerned. And one of the key reasons that we had highlighted earlier was the rising popularity of passive funds, which would impact the profitability of the asset management companies negatively. Also, investors should not forget that SEBI has introduced a consultation paper in Jan 13 this year, and it has the objective of the paper is to rationalize the total expense ratio, which is basically the fees charged by the asset management company to the investors. So this is something which needs to be closely watched. Also, SEBI has temporarily halted the additional expense charges of around 30 basis points on the new inflows from retail investors from beyond top 30 cities. So if we see overall, the asset management companies are facing multiple headwinds, and the latest tax amendment is also a negative in that aspect. So as far as the investors are concerned, they should remain on the sidelines as far as the AMC stocks are concerned. We have seen that these stocks have underperformed in the past 1 year and the valuations have moderated. However, investors will be still better off, waiting on the sidelines for some time.
Right. So stay on the sidelines where AMC stocks are concerned because of bad news flowing in for this industry per se. But looking at it from the bank's perspective, banks were firing on all cylinders except for the deposit growth, which has been sluggish to say the least. And this removal of indexation benefit and LTCG benefits from debt funds makes fixed deposits even more attractive compared to debt funds, right? Now, there are comments from Sunil Mehta of IBA saying that banks are in fact looking at garnering somewhere around $36 billion worth of deposits from 1st of April, given the fact that, this move has been made by the government. So, in that sense, that deposit growth gap has also been plugged. So which are the banks you would be looking at in the context going forward?
Yeah, so if we see the key beneficiary of this move is the banking sector. If we see how the financial savings composition has changed in the last many years, banks have been the key loser. Like if we see in FY14, bank deposits constituted around 67% of the financial savings. That has reduced to around 38% in FY22. So clearly the banks are struggling in terms of deposits. Even if you look at the latest numbers, that is as of Feb 24th, deposit growth for the banking system stood at around 10% YOY, while the credit is growing at around 16%. So clearly there is a gap between credit and deposit growth. The credit to deposit ratio has also inched up to 75% level, which is a pre-pandemic level because of the sluggish growth in deposits. And the most important thing is for the banking system, if you look at the liquidity, how liquidity has panned out, it was in surplus of more than 6 lakh crore at the beginning of FY23. And now currently the banking system is having a liquidity deficit of around 29,000 crore. So deposit rates obviously are rising. But despite the rise in the deposit rates, we have seen that almost for all private sector banks, the larger ones, the deposit growth has been lagging the credit growth as for the last quarter, except for HDFC Bank. So now with this move, we will see that the financial savings will flow from debt mutual funds to bank FDs, and this would benefit them. And some of the stocks that investors should consider in the banking sector are the large private sector banks, the likes of ICICI Bank, obviously HDFC Bank, but HDFC Bank, there is some uncertainty related to the merger news and whether if they are getting any RBI dispensation as they had requested for. So that is something the data investor needs to watch. So ICICI Bank, HDFC Bank, Axis Bank looks good. Even SBI looks very attractive at the current valuation. And for SBI also, we have seen that deposit growth was was lagging behind the credit growth. So these are the stocks that will be the key beneficiaries, and investors should keep them on their radar.
Right, so those are the banks looking attractive and investors should be keeping them on their radar. With that, Neha, thanks a lot for taking out time and putting things into perspective for us. Let's go back to Sacchitanand then. Sacchitanand, since we are talking about banks, I can see that we are getting some queries regarding some of the banking counters. Aniket Kumar has sent in a query on IDFC First Bank. Now, if you look at this bank on a YTD basis, it has shaved off somewhere around 14%, from its share price. How would you advise investors to play this one now?
Well, Nandita, if you look at the broader structure for the last 3 months, we have seen this particular bank, gradually correcting. Right now, it is, placed near its 200-day exponential moving average, which is placed around 53, and we still don't have any major evidence of a reversal here. If you look at the weekly structure, this is the first time wherein there's a negative crossover which has been exhibited by its 5 and 20 weekly exponential moving average. So basically, this is a good strong indication that there is weakness which we are been seeing since last 2 weeks, and the resistance at 56 is very important. So unless we don't see a decisive closing above this 56 mark, we don't see any change in the behavior of this particular price formation. On the lower side, it is likely that this particular support at around 53, which is its 200-day exponential moving average, may not hold, and we may see some further slippages towards 49, 48 kind of a zone. I think that will be an ideal zone wherein the investors can look at the price action and probably get into some of the long trades. But as of now, I think there is a good chance that we may see further weakness in this particular counter, and 49 could be a decisive target.
Right, 49, a decisive target for IDFC First Bank. Let's also talk about the stock of the day. According to me, that's Kalyan Jewellers, because we will be seeing a block deal in the counter today, according to reports. Warburg Pincus will be selling 2.5% stake in the counter for 288 crore rupees. Now, the share sale will happen somewhere around 110 rupees a piece at a discount to its current price, which is at somewhere around 118 rupees a share. Would you advise investors to look at this counter in today's session?
In today's session, purely if you look at the last 2 weeks price action, we still don't have any evidence of a decisive closing about this 120, 125 kind of a zone, which has acted as a supply zone so far. So in case if this particular level has been breached on the higher side, a decisive breakout is evident at around 120 to 125, then probably some long positions can be recommended here, but overall we don't see it sustaining above 140, 145 mark. So purely from a short-term perspective, a level-based trade can be initiated on the long side. The stop loss should be placed at around 110.
Right, so that's the strategy on Kalyan Jewellers for today. But let's also move on to the top brokerage call of the day. Kotak Institutional Equities has reduced its rating and target price on Hero Moto Corp. The target has been cut to 2,400 rupees from 2,600 rupees. In fact, the brokerage expects gradual recovery in the entry-level two-wheeler segment volume. Now, Honda's entry into the entry-level segment may lead to further market share loss for Hero Moto, and it will see, and there is an inability to gain traction in scooter and premium bike segment that remains a concern for Hero Moto Corp. How would you advise investors to look at Hero Moto Corp now, given the fact that the price action in this counter has been pretty on the downside? It has been in a steady downtrend. So would you expect more downside going forward, or is there any opportunity to trade here?
Nandita, I think we may see a good opportunity here. If you look at the structure for the last 9 consecutive weeks, this particular stock has been, scaling lower. We saw a breakdown at around 2,700 in the month of February, and since then we have really not seen any decisive pullbacks. If you look at the daily chart placement for the last 7 trading sessions, we are seeing narrow range formations. Plus, its daily RSI has slipped below this 22 mark, which is a heavily oversold zone. And plus, if you look at the monthly structure as well, we have this particular stock, near to its 200 monthly exponential moving average, which would be a very strong support. So we don't see this particular support zone getting breached. Probably we may see one final leg on the lower side towards 2250, and I think that particular leg should be utilized from a long perspective. I think accumulation can be done within this particular zone towards 2250, 2200. Fresh short positions are not recommended here. It's heavily oversold, so probably a bounce back is something that could be evident in this coming expiry, the April series itself. So we are not expecting any major downside in this particular counter, and probably investors may get good opportunity to accumulate this particular counter in their portfolio soon.
Right, so that's the call on Hero Moto. Let's shift focus to the pharma pack. Yesterday, we saw a very good rally coming on stocks like Lupin, Sun Pharma, Cipla, etc. But we have a query on Spark. This counter was under pressure, lost somewhere around 2.5% on a day when the pharma shares were clearly, having a good day. What would you advise investors to do with this particular counter now, Spark?
Still the trend is weak. We don't see it, changing its course soon. We saw some momentarily bounce back, wherein the stock prices, flared up towards 180, 185 kind of a zone. But again, the stock failed to sustain these levels. Even if you look at the weekly structure, despite of the fact that this particular stock has been correcting for more than 20 weeks now, its weekly RSI is still placed somewhere close to 32. It has still not hit the oversold zone. So a decisive reversal is something that we are not, observing right now. Probably this particular move on the lower side may continue. 185, 190 still remains a very strong resistance zone. And on the lower side, we may see further slippages towards 150.
Right, the stock is expected to slip to levels of 150 from here. Let's talk about Lemon Tree Hotels. This stock is in news given the fact that it has opened its 5th hotel in Kerala. Now, Lemon Tree has not done all that well on a YTD basis. It's down 12.5%, and it has been in a steady downtrend over the last 5 sessions as well. How would you compare Lemon Tree with the likes of IHCL and EIH now?
Well, I think Indian Hotels still remains the favorite, but if you look at Lemon Tree, for the last 4 months, we have seen this particular stock oscillating within a narrow range. 79.80 on the higher side is the resistance, and if you look at the supports, they are well placed somewhere close to 70 to 68 zone. So until unless we don't see a decisive breakout from this particular range, we are not expecting any major move here. As of now, with the market, this particular stock has been underperforming, and probably there's a good chance that the lower end of this particular range, which is placed at around 68, might be seen immediately. So as of now, the immediate trend remains weak. The broader trend remains consolidative. So probably one should wait for this particular consolidation range to be breached, and we may see a decisive move only unlocking once the 78, 79 mark is breached on the higher side.
Right, that's the call on the hotel pack. Let's get in a query on Prestige Estates. This one is coming in from Karthik Raja. Now, Realty pack as a whole has been under pressure. We've seen last week as well, the entire Realty index losing to the tune of 4% or so, and this week as well, it's under pressure. How would you advise investors to view some of these counters like Prestige Estates, DLF, and the likes now?
So both the counters, DLF and Prestige, I think they are placed very well near the demand zone. Especially if you look at the data of Prestige, we have a very clear band which has been exhibited since last 7 months now. On the higher side, it faces the resistance around 500, and there's a very good strong demand zone which is placed somewhere close to 380, 395 kind of a zone. So it is placed towards this lower end of this particular band. I think if you look at the weekly RSI, it is again exhibiting some fresh strength. So it could be a good idea in case if we get further declines towards this 380, 385 zone, one can accumulate this particular stock in their portfolio. On the higher side, the stock needs to be reviewed once it starts trending near this 480, 500 kind of a zone. So as of now, I think it's a good opportunity. The reward to risk is favorable for fresh longs. 360 on a weekly closing basis should be the stop loss.
Right. Let's also take up a query on IEX. We've got two queries coming in on this counter, one from Satya CK and Chandrakant Shinde. Both of them want to know your thoughts on IEX. Now the stock was down somewhere around 6.5% yesterday. Over the last 5 sessions, it has been in a steady downtrend. Would you advise investors to use this dip and buy into this counter now?
Well, certainly not. In fact, if you look at the major trend still remains weak. We have seen multiple attempts getting given up. If you look at the recent up move that was triggered, it again faced resistance near its 200-day exponential moving average, which is placed around 150, 155. It has been trending below this particular average for almost a year now. So it is not a good idea to accumulate this particular stock in your portfolio. In fact, the immediate support level is placed at around 130. So in case if we see this particular support again getting breached on a monthly basis, we may see further weakness getting into this particular counter. So definitely not a stock which can be accumulated in one's investment portfolio.
Right, so avoid IEX at the current juncture. Let's also take up a query on Gujarat fluorochemicals. This one is coming in from Jiffin, and he wants to know your thoughts on the counter for the long term. Now, this stock has shaved off 1/4 of its price over the last 6 months. Should one look at it for the long term, or is it an avoid right now?
I will place it as an avoid. The volume action is always thin. If you look at the price, movement, it is also not that decisive. It has been trending below its 200-day exponential moving average. If you look at the weekly structure, we have some signs of a support somewhere close to around 48, 45 kind of zone. So probably we may see this particular decline, which has been started a few weeks back, getting continued. And on the lower side, this particular support at around 45 would be much more important. As of now, it will be an avoid.
Well, avoid the Gujarat fluorochemicals at the current juncture. Hope that answers your query. Let's take up a query on Bajaj Finance. Then Dave Paul has written in, and he wants to know your thoughts on the counter for, and he wants to know levels to trade for intraday trading. What would you advise him to do?
Well, the pressure is clearly evident here, but I think from a trading perspective, the immediate resistance at around 57.60 would be important. In case if we see this particular level getting breached on the higher side, we may see a good amount of short covering move getting unlocked. But on the lower side, the immediate support is placed somewhere close to 55.50. We don't see this particular range getting violated. Probably for the day, we may see the stock again oscillating within this particular range itself.
Right. Let's also take up a query on Tata Power then. Aniket Kumar has written in, and he wants to know if this is the right time to accumulate. Now, it has been in a steady downtrend, but given the fact that, there will be a lot of demand for these power stocks in the wake of the heat waves that have been predicted by the IMD, do you think, even though the stock is near about its 52-week lows, do you think this is the right time to get into this one now?
Nandita, for the last 1 year, we have been negative on this particular counter, and still, we don't see any major changes even on its weekly scale. So as of now, it is still an avoid. We see further consolidation to weakness in this particular counter. We are expecting a move towards 160, 165 eventually, and I think that will be an ideal zone wherein the trend can be reassessed. So as of now, it is still in that no trade kind of a zone. The resistance is well defined at around 210, 220. So unless we don't see a decisive breakout, there may not be a change in trend. But on the lower side, the existing structure is indicating a move towards 165.
Right. I think let's just take up the last query for the day. This one is coming in from Gurmeet Singh, and he wants to know whether he should average LIC at current levels. Now, we all know that the stock has come off quite a bit since January end, ever since the whole Adani issue was brought to light. But would you advise him to, nibble in right now?
If you're talking about LIC corporation, I think the major trend still remains weak. We don't see any respite here, despite of the fact that on its daily scale, we are seeing positive divergence. But the way the price has been performing and the way the major support at around 580, 600 was breached. We may see further slippages in this particular counter. The immediate support to track is around 540. We don't see this particular support getting sustained eventually. We're expecting a move clearly towards the 465, 440 zone in the near term. So even if we see a bounce back in this particular counter, that bounce back could be a good opportunity to exit from existing longs unless we don't see a firm reversal on the higher side when we see this particular price scaling above confidently above this 610, 620 mark. The trend still remains weak. So it is possible that we may see further weakness in this particular counter. In case of a bounce back, the bounce back should be a good opportunity to exit.
Well, use bounce backs as an opportunity to exit. That's the call on LIC. But, Sacchitanand, leave us with some stock recommendations for the day for viewers.
Well, Nandita, we talked about pharma, which was outperforming yesterday. If you look at Cipla from this particular pack, for the last 2 weeks, we have seen multiple attempts on the bullish side. We are seeing 2 consecutive weekly hammer formations on its weekly scale. We are expecting this particular short covering move, which was triggered yesterday, to continue on the higher side. We expect a move towards 905 during the day and a positional target of around 920. On a weekly basis. We are recommending long positions here when it comes to Cipla. The stop loss should be placed at around 876. Any declines towards 880 would be considered healthy to create these long positions. On the short side, ICICI Bank, is one of the weakest counter that we see. If you look at last 2 trading sessions, we saw a gravestone doji formation. The confirmation of the same was set in yesterday's trading session itself. We saw 520 and 200-day exponential moving averages being breached in one trading session itself. So probably this pressure which was exhibited in yesterday's trading session will continue on the lower side. We're expecting an eventual move towards 840. So any pullback towards 850, 852 levels should be utilized to create fresh short positions. The stop loss from here on should be placed at 850, 630 on the futures for a price target of around 840.
Right, so a buy call on Cipla and a sell call on ICICI Bank. Well, with that, Sacchitanand, thanks a lot for taking out time, joining us and answering all our viewers' queries this morning. Well, with that, we've come to the end of this edition of Morning Trade. And it's a goodbye from me, but don't go anywhere because coming up next is Opening Bell.